All right. Good afternoon, everyone. Hope you guys are doing well. What a week this has been. So here we go. We're going to do some quick updates and we're going to look at some charts and then we'll start plotting out for the week ahead. Next week is going to be big, right? It's the FOMC week, and most likely, the speculation so far is that they'll do another 75 basis points. So we'll talk about that. And we'll talk about the big techs, and we'll just go ahead and hop right into it. But so far, very green on the week. I think my best trade this week was obviously the Meta puts that we nailed, and also some Q puts going into the Meta earnings, and of course the earnings yesterday on Thursday afternoon. So great week overall. Glad you guys enjoyed it. So here we go. Let's talk about some charts and what's happening throughout the markets here. So think about this: Microsoft, Google, Amazon, and also Microsoft, Amazon, Google, all missed. Right? It wasn't a terrible, right? I think there was some overreaction, especially when Amazon dropped their earnings. So we saw their shares coming back today. Microsoft did miss, and Google did miss as well, as they're cutting their headcount growth over in Q4. Their ad revenue is down, and then also that, of course, took down Meta over the week as well. But 4 out of 5 big tech companies all dropped throughout on their earnings report. But here's the interesting thing: why in the heck is the market's green on the week? Now, we're not green by that much, okay? I don't think we made significant improvement, but today's rally was really, in my opinion, powered by Amazon, all right, and also Apple. All right, Apple, as you know, today shot up over 10 points. We'll talk about that. A lot of volume into tech on the for today, and that's why we saw the Qs and the SPYs just rose to back to pretty much yesterday's level before the earnings drop. Overall, yes, we have a green week, but it's not significant enough to say, hey, the bottom is in. There's a lot of reasons that we could be rallying for, right? Number one is, of course, the FOMC pump. Whenever we get into the FOMC period, the markets generally do move up in anticipation, pricing in the next potential rate hike. If you're looking at the screen here, we are the market is pricing in 75 basis points, at 81% possibility of a 75 basis points in November. And by the way, that will be November 2nd of that will be next Wednesday at 2 p.m. Eastern time as usual. All right. But this key figure here started to move up today. All right. When I checked the CME this morning, it was about 15% likelihood that there'll be a 50 basis points rate hike in November. All right. Today, this afternoon, as of this recording, it is now 18%. So you see why that is a potential why or a reason that the markets are moving up today. It's most likely the most plausible one. In addition to that, you had Apple and Amazon, make some significant gain on at least on Apple and Amazon recovering pretty well throughout the day here, right over 103. Next, we have obviously the next week is going to be midterm elections. Okay, if potentially Republicans retake the House or the Senate, there's going to be some pump in the market, right? They're going to be a little bit more optimistic going into next week. All right. And if I look at the next slide here, I didn't post it, but there is actually the rumor too and speculation that after this particular rate hike of 75 basis points, there will be 50 basis points going into December. Now, whether that's going to come true or not, but I don't know. But the argument does seem sound. Number one, we're starting to see that the macroeconomics are breaking down. All right. We saw that the home sales or new home sales this week, this data on Friday came out today, was minus 10%. Okay. So you're starting to see cracks, I guess, in the economy, not just here in the United States, but globally. Okay. Japan is actually throwing out more QE to solve their QE problems. How that works, I don't know, but that's what they're doing. All right. So you have over a couple weeks ago, you have UK rescuing their pensions, okay, and trying to rescue their bond market as well. Today, while the market's moving up, the yields and the dollar index was actually going up at the same time. All right. So you're starting to see cracks in the macro world, and that may be an argument, okay, or a potentially Fed pivot. Okay, let's just call it that, a Fed pivot, that they'll do 75 BPS and then they'll ease up, okay, into 2023, or ease up in December and do only 50. Okay, so the market, if that's the speculation so far, and we don't know if it's going to be true or not, that's the reason why I think the market is running up, especially today, especially after the market really tanked on some of these earnings, but shot right back up today. All right. So let's move on here. Some other interesting charts. This is not my chart. This is a Reformed Trader on Twitter. So this is what exactly this is. He's comparing between 2008, okay, the bounce in 2008, and the bounce that we currently are seeing in the SPYs in 2022. And guess what, folks? It looks very identical, and it's entirely plausible too. So a lot is going to come down to what Powell is going to say. The market knows it's 75 BPS, okay? But is he going to come out swinging, right? Is he going to come out saying, hey, my message has not changed since Jackson Powell. Do not do not mess with me while this market's running up, because he needs a down market. And quite honestly, we haven't seen great significant improvements in jobless claims. The labor market is still tight. Inflation is still sticky. We saw PCE came in line with expectation. And also GDP is green. GDP is estimated 3.1 preliminary, 3.1 for the quarter, for third quarter. So those aren't news, or that's not really music to Powell's ears, right? He needs more evidence that the everything's breaking down faster in order for him to ease up. Okay. So this run up that we're having, I'm not completely sold on it, but I'll play it as we do here in our room. We play it day by day. All right. Whatever is happening in the macro, we'll worry about that after the bell. All right. But in the meantime, we just focus in on the charts ahead of us, okay, and before us. Now, I do have to point out, this is the S&P 500 McClellan oscillator chart, okay? This is a daily S&P 500 chart, and look what's happening here, okay? We are overbought. And when we get overbought like this, okay, we are overbought more so currently, according to this oscillator, than the entire year. Okay. And we're not seeing a ton of volume on SPY or Qs. Okay. But we are seeing those volume come into Amazon, Apple. I'll talk about that. But this is where we need to be careful, folks. We hit 3,900. It actually closed at 3,901 today on the S&P 500, but it's at the top of the Bollinger Band as well. So perhaps some pullback is needed going into next week before the FOMC meeting. Next slide. Take a look at the NASDAQ. Now, NASDAQ has some room to go, right? Here, but we are overbought on the NASDAQ, similar to when we dropped here, okay? When we topped out here, when we started topping out in this area back in April, okay? So could this be a start of another counter trend rally? Entirely possible. But I'm seeing overbought readings so far on the daily. Now, on the weekly, it does say tell us a different story as well. So let's go ahead and jump into the charts. And so I'm going to start with Apple first. Okay, so this is your daily Apple chart. Okay, high volume. You had more volume today than you did back on September 16th when it actually fell. All right, and we actually tapped the moving average 200 on the daily. We held a simple moving average 20 on the daily as well, and boom, they actually did report great earnings, but it had no action in the after hours yesterday. But all the action was today. It ran up 10 points. All right. So that is where Apple stands. I mean, we move right across the volume gap. You don't have a ton of supply areas till about 160 at this point. All right. But here's the thing that I don't like about some of these tech charts is the fact that we are overbought on the daily. When we get overbought like this, okay, it's not good. All right. High volume, yes, certainly. Powell has to be dovish. If you're a bull, all right, going into next week, you better pray that Powell sounds super dovish, signaling potential pivots. That's the hope, right? Or else all this is going to come crashing down. All right. We saw the stochastics back in this area here in August. Okay. Now I know where you're going to say, John, we were extended for 2 months. Yes, absolutely. Okay. But I'm just saying, all right, this staying elevated can, it can stay elevated for a while. All right. But we're getting into a danger zone here. All right. So I'll just leave it at that. High volume, once again, a ton of volume, right, into Apple today, held up the markets. And look at the CCI, right? 193. That's insane. All right. However, the markets can stay irrational longer than you can stay solvent. So continue to play the trend and play the day. Now, let's go over to the Apple weekly, and I'll start moving into some of the other charts as well. The weekly, not bad, right? We actually closed or managed to close above the SMA 20 on the weekly chart. Pretty decent volume, right? And this is starting to turn up. So the weekly, while the daily is oversold, overbought, the weeklies are starting to heat up. All right. So this may be something we need to watch for going into next week. But if I were to put a target, and I'm sure you want a target, all right, John, tell me, what do you think? Okay. So we got to overcome this SMA 20. That's for sure. All right. There could be some even retracing on Monday before we start moving up again for pivot, right, for potential news from the feds. Okay, so I'm going to say upside target, hey, we're going to beat this SMA 20. Eventually the bulls are going to overcome this SMA 20 and we'll go from there. All right, so with that being said, let's go ahead and actually let me go to Apple, and then I'll move over to my more advanced charts, okay, with more lines and more EMAs. Okay, once again, SMA 200 right here rejected. And the 9 and 15, 34.50 is about to cross here. Okay, so that's very bullish in the short term for Apple. But you're looking at Apple on a daily here. It is overbought once again, high volume, as I mentioned. Okay. All right. So with that being said, let's go ahead and go to Microsoft. All right. So we know that Microsoft did miss. All right. But a huge rebound today. But look at this rebound. This is what I mean. Apple and Amazon carried the markets today. It really wasn't. Throughout the other stocks, right? There wasn't any volume. Look at Microsoft, ran from 225 to 235, right near the SMA 20. And look at the volume today. There's no volume, right? Not like this day here, all right, when they actually reported earnings. But we have a gap to fill, right, to 245. If the market continues to rally, guess what, folks? They're going to fill that gap to 245. Okay. We did actually hit my target on the week to 250.72. It actually hit it right on the nail. So I'm going to go ahead and remove that. All right. But for next week, I think if the markets continue to run up, hey, I think it's going to try to fill that gap with or without volume. All right. So Microsoft. So let's take a look at Google. All right. Somebody started buying Google yesterday, right? Look at Google, $92 on opening right after the earnings. All right. So we reported earnings here. We nailed this one pretty good throughout the day, but I did not hold any Google positions. Just flipped the cues really when it dropped. Okay. We're still under SMA 20 here. This was the bear flag. And this is, if you were in our room on, I think Thursday, a couple hours before we talked about before the earnings for Amazon, Microsoft, I went through all the big techs, right? The four big techs that did, the three big techs that did report. All of them was showing a daily bear flag, okay, and even a weekly bear flag on Google, right? You see this? Okay, so those bear flags were pretty much my thesis as far as going into those earnings, and they actually turned out to be accurate, except for Apple. Okay, except for Apple. But other than that, selling volume on Google on the weekly. All right, let's move back over to the daily here. But in any case, you got another big gap here to 102, right? That's going to be a magnet. That's going to be a magnet. I'm not saying it's going to we're going to absolutely take out this gap. But I am saying I think the Google, all right, is going to want to test that SMA 20, all right, which is about 99.81. But see, even with the Google run up today, look at the volume. That's not good volume, folks. This is not a good read at all for the tech sector. If some things were to happen in the macro level, if Powell comes out dovish once again here, okay, besides all the speculation. But I'll show you. All right, we go to Meta. All right, Meta was our best trade. Meta had that diamond bottom look. It did. Sorry, it did have. I believe it did have a weekly bear flag, right? Okay, so there it is. This was the reason why we went with Meta puts as well. We did the what 115 puts, right? And Meta's under $100 and high volume on the sell side. All right, for Meta. The thing I'll say about Meta is that I understand Zuckerberg's position. He is doubling down and putting more and more money into Metaverse. All right. And I think as an entrepreneur that he is, like many of us, we're going to believe in our dream. We're going to believe in the thing that we're after, that this is going to be the future. And I get that. Right. But man, they're burning through cash and they have significant cash worries for 2023. So this is the investors punished Mark Zuckerberg for the earnings. All right. As far as the daily chart goes, not much improvement. Even with today, you almost have no volume on Meta today. People are just kind of leaving this alone for now here. So that's the Meta. We hit our target, right? The weekly target from last week's video. We achieve 138. Okay, a retest of this 138, but then when the earnings dropped, it was no good. And I'm glad we got some of that good earnings or good good returns on our put play. All right, so that's the Meta, that's the Microsoft. Let's go back to Amazon. Okay, so this is what Amazon looks like. It dipped to $87 last night, right? $87, and now we're at 103. So that dip was being bought. All right. Everybody, I would assume long-term investors said, hey, this is a good deal for Amazon. They actually reported good numbers. It's just that the market simply overreacted. High volume on the daily here, but the stochastics are starting to move down. All right. So and the CCI is oversold. So there could be a potential gap. This would be fairly easy to call. And I think they will fill this gap somehow next week at 109. All right, so I'll put a target there. Amazon, definitely worth watching. I think we did so well with Amazon on the run-ups, on the downside. We did the 100 puts. It didn't pay out as nicely as I would have thought. Some Ivy killed it, but we got out with 75% on Amazon puts. Not bad. But they're going to try to fill this gap going into next week. All right. So let's talk about one more, and then I'm going to start moving into our favorite topic, which would be the Qs. Tesla with the daily hammer, not good volume. And I get it, right? A lot of the volume went straight into Amazon, Apple today, right? And everything just pumped. But you got a nice hammer here, but it's just having trouble. It did close above the SMA 20. Okay, that's a good thing, where it rejected on Thursday, rejected on Wednesday, and finally made that move across. What's going to be interesting for Tesla is that it keeps getting shot down around the 230 level. All right. So I'm going to say right here is going to be the target for the upcoming week here. So I'm going to put Tesla target right here about the 234 area. All right. Before it's going to start having some hesitations. Once again, let's look at Tesla. I forgot. I think there's something I wanted to mention here. Yeah, that's right. There is a small gap here that needs to be filled as well. Obviously, there's a gap down up here as well. Now that the deal is closed with Twitter, if you don't know, Twitter is now delisted from the stock exchanges. So he's taken the company private. Apparently, there's no news of him selling any shares. So I think investors are pretty happy about that. But once again, folks, on this move up, if you look at Tesla volume, it's headed on a downside. Okay, this is very reminiscent to me of the June rally. Now, the June rally was a long rally that surprised many bears. Okay, if you look at this area here, okay, just the kind of the symmetrical, the shapes of it. All right, it's this up and down movement, and then we're starting to move up. move up, move down, move up, move down, but generally we're in a kind of an uptrend here. This is starting to look like this area here back in June. Okay. You definitely did have higher volume finally on the Qs today, which is good. All right. But it's not anything significant. We're moved right into the 34 cloud. Okay. So for next week, we're gonna the market, all right, there's gonna be significant overhead, right, at the 284 area. This is the area of rejection on the last one back on October 25th. All right, we back tested and just shot straight through. So I'm gonna put a target of 284 for the Qs going into next week. All right, and we'll have to see what the FOMC says or what Powell says, because that's really what's going to happen. That's really what's the market is going to be looking at going into next week. So these low volume pumps aren't going to last long, especially if Powell comes out, absolutely dovish. I'm sorry, hawkish. Okay. You can see that when we discussed the Qs last week, there was an inverse head and shoulders, and that is still working out at this point. Nice bullish engulfing candle on the excuse me, on a daily. Okay, so that's positive. All right, so I think that we're going to start seeing this 284 get tested again. We tested that mark back in October 6th, October 25th. Okay, October 26th. Let's see if it happens again. Halloween, which is Monday or Tuesday, or November 1st, beginning of the week. So once again, my upside target 284 going into next week, and then we'll have to see what Powell actually says. Now, going on the weekly chart, okay, the weekly chart isn't really impressive. What is impressive is potentially the CCI's crossing into a bull signal, and the stochastic has crossed as well. We're overbought. Okay, make no mistake, we're overbought on the daily, but on the weekly, it's showing a different story. So there could be that run up, just like we did in June. Remember, we had 3-4 straight weeks of green. All right, on this run up. So if I were to make a call here, I would say this run could potentially go to 292. Okay, before we see some more downside, because the SMA 20 is right there. Okay, the SMA 20s may become a point of rejection. All right, so if 284 is the immediate target, if everything goes well in the markets, hey, Powell's like, hey, we're going to do 50 PPS, or we're going to potentially pivot. We're going to be data dependent. We're not going to, we don't want to break the economy, or anything sounding dovish could send the markets up to 292. So that's going to be an area that's going to, that we'll have to watch here. All right. So, ladies and gentlemen, that's it for the week. I'm done here. Like I said, the Qs, nice move above the moving average 200, held perfectly. All right, so you can see another move up. This rally here is starting to look like this rally to me, at least on the weekly. But it looks like too, if we don't achieve a higher, right, or if we keep having these lower highs, all right, that's not good. So that just tells us we have another leg down. There's more room on the downside. If we were to move up past, let's say 337, 335 area, that would actually finally, at least on the weekly side, break down, right, the downtrend. Okay, but until then, we'll just play it day by day. No bias, at least in the intraday. Whatever you think about what's going on in the world, hey, it's not really going to matter on a 5-minute chart, because the market's going to do whatever the market wants to do. All right. So with that said, I hope you guys have a great week. I'm done here.